Ninja MCQ, financial accounting and reporting, rapid fire, 1 minute or less. Here we go. Red Company had $3 million in AR recorded on its books. Red wanted to convert the $3 million in receivables to cash in a more timely manner than waiting the 45 days for payment as indicated on its invoices. Which of the following would alter the timing of Red's cash flows for the $3 million in receivables already recorded on its books? Hit pause, answer for yourself, answer below. It's okay, be brave. Right, the answer is B. Factor the receivables outstanding. Only factoring the receivables would ensure altering the timing of cash flows for the $3 million in receivables already recorded on its books. Factoring the receivables outstanding in a transfer is a transfer of the receivables to a factor, to the transferee, without recourse and is accounted for as any other sale of an asset. Debit cash, credit the receivables, and record a gain or loss for the difference. For more Ninja MCQ, go to ninjacpareview.com.